The Trump administration reportedly considering new tariffs on China just weeks before President Xi Jinping is expected to visit the White House. Connor Hansen joins us with more on that. Hey, Connor.
Hi, Dagan. Well, this comes after this week's announcement of new tariffs on anyone still doing business with Iran. Now, China, Iran's largest trading partner, will reportedly be punished for flooding the global market with underpriced goods. The White House is reportedly considering a 7.5% levy, and that would come at a pivotal time here, about a month before President Trump's scheduled meeting with President Xi here at the White House.
They provide a lot of the support to the Iranian regime, and the fact that we are now discussing directly with China that there will be consequences if that behavior continues demonstrates the seriousness of the president to bring this to an end using economic power.
And this would follow last month's double-digit tariffs on China and 59 other countries for failing to police forced labor. China has pushed back against claims that it's oversupplying markets like the auto, cement, and steel industries. The U.S. imported more than $300 billion in goods from Beijing last year. China had its first $1.2 trillion trade surplus worldwide last year.
China's economy is hurting right now. Their stock market has been flat. They're not growing. They need to trade with the United States, too. We're the big market out there.
And on Monday, the Treasury Department announced sanctions on 60 different entities, but didn't give details on the specific countries included, just that President Trump has been speaking with them. And China has already pushed back on these new tariffs on Iran, saying it will only exacerbate the current situation and those tensions, Dagan.
Connor Hansen, thank you so much for that.
You got it.
Tariffs. Do we need the revenue?
Well, I know what you're going to say. We need the revenue. I agree.
It was a question.
Yeah, it was a statement. But here's what I would say. I like the trade fight with China way more than Canada. I think if we're going to have some trade fights in the world, it should be with China because they're way more dangerous. They're an adversary. Canada's a big, weak country. So I don't think it's going to derail the meeting with Xi Jinping. This is what they always talk about. I think it's good for them to talk about this. I think we should tariff China because they're the guys keeping Iran propped up, and I think we should do something about it. So go for it.
We're also in a good, stronger position, or maybe a less weak position. We just talktalked about how GDP growth here in the U.S. looks really good. It is a totally different story for China right now. Retail sales there only up 0.6%. Well below, less than half of the estimates. Fixed asset investment, including real estate and infrastructure, down 6.7% from January to July. These are China's numbers. Their unemployment rate, urban unemployment rate, 5.2. That's up from just 5% in June. So when you think about coming to the negotiating table, who's in strength and who's in weakness, I'm actually wondering if we have the upper hand here because China's economy is in a significant slowdown this summer.
I think that, and I'll add, the oil situation with Iran gives us additional leverage, too. Obviously, the strategy right now is choke Iran financially, and part of that is no oil's coming out, no revenues coming in. Now, I know China has been able to buy that oil on the cheap, discount it on the market, and store it, but that's not going to last forever. And so I think that the president, in his chess moves here, has a strong advantage going into this meeting.
Agree. And just the way President Trump seems to operate is, you know, he likes a little uncertainty or a little, he wants to mix things up before the meeting comes in. So he's throwing a little flame on the fire, gas on the fire before he goes in there. So if he has to give some, maybe he has to get a good deal that he wants, maybe he has to give up on this 7.5% tariff. But he's going in there to negotiate. He wants to come from a point of strength. So this is what he's doing, and I think it's great. I'm surprised more people don't see through the negotiating that he's doing, but I'm glad they don't.
Well, so there's a lot of people critiquing the president and Besant saying this whole economic outcast thing in Iran doesn't do enough on China. So maybe to Mike's point, this is how you start setting the table for something to happen there.
I saw that, but China has been dramatically reduced its oil imports.
Yes.
And so China was kind of taking care of what we needed China to take care of in terms of not importing Iran's oil. And if we shut off the oil, that's the most important element of propping up Iran's economy. And that part of the Iran equation was already taken care of, already solved. So I don't understand that criticism.
I mean, I think they were criticizing him because he didn't say that much about it. They wanted him to like say it, and he just said nobody's above the. I think it's an invalid criticism, but that's the point. People say if you don't do it, if you don't hit China, the whole Iran thing doesn't matter.
Then, do you want me to be a little bit of a negative Nancy for a second? I think one of the bigger things that China has on us, obviously they're a major exporter, but as we're talking about who can help buy our debt, thankfully, and I think this is a good thing, China has reduced how much debt they've bought from us in the last 2 decades, but they still are the third largest holder right now, about $640 billion. It's only 2% of our outstanding debt. But again, as we were talking about, how long until you get a failed bond auction to make Congress wake up and say maybe we need to do something about our spending? How much could China use that as a lever to say we are or we are not buying? Just throwing that out there.
Leave it at that.